Well, it looks like inflation just crashed here in Canada. Do you think maybe the Bank of Canada will help us with some big rate cuts soon? I guess we'll see. September's inflation report came in here in Canada this week, and it came in quite a bit lower than the market expectation. Now, before I share the rest of this with you, if you do like to see this content, please hit subscribe, maybe hit that bell so you get notified when I give you more content, and maybe drop a comment, and that will help the algorithm share this information with even more people. Now, the market thought that we were going to see a 1.9% inflation number for September, but when the number actually came in, it came in at 1.6, which is actually quite a bit below the expectation. I know 0.3 doesn't seem like a really big difference, but when we're talking about numbers below 8%, that's huge. We saw inflation peak 2 years ago around 8%. It's now down at 1.6, and that is now below the target of the Bank of Canada. And if it keeps pushing lower and even gets below zero, that's actually really bad because it causes deflation. And that's kind of when everything spirals out of control. You see, the Bank of Canada has a mandate. That mandate is to keep inflation at about 2%, which helps keep price stability here for Canadians. Now, it's been difficult in the last couple of years. You can see right there on the chart, but it does look like those high inflation numbers are definitely in the rearview mirror here behind us. And now the bank's actually stuck in the awkward spot of needing to spur our economy and to do it quickly. 5 weeks ago, when the Bank of Canada delivered its third consecutive 0.25% rate cut, it told us that it would be willing to cut interest rates even more quickly if the data surprised on the downside of its forecasts. And you know what? The data that's been coming in since then has been less than the bank's forecasts. For example, the bank expected GDP, which is the primary way that we measure growth in our economy, they expected that to increase from about mid 2% up to 2.8% annualized growth in the third quarter. Those numbers aren't quite out yet. They will be soon. But current estimates are that it actually slowed, not just a little bit though, but down to 1.2%. That's a huge slowdown. So it's not only inflation crashing, it's our GDP pushing down toward recession territory. Now, recession territory can be good for interest rates, but it's not good overall. In spite of some recent good news on jobs reports, both in Canada and the United States, and also in consumer spending, the big picture for hiring, for consumption, and for investment is still looking weak. So between the weak outlook for economic growth, lower than anticipated inflation, there's now about an 80% chance that we're going to see a 0.5% rate cut by the Bank of Canada next week. And, by Christmas time, they're expecting like 100% chance of at least 0.75% total drop, and quite likely even more than that. So we might see also on December 11th, another 0.5% rate drop. So that's a huge benefit for anybody in a variable rate mortgage. It's a huge benefit for anybody wanting to get into a variable rate mortgage. And for anybody looking at fixed rates, looking at mortgage renewals, we're also going to see downward pressure on the fixed interest rates as a result. So if you have any questions, please click through on the description to the website. You can contact us. Please ask questions or comment here in YouTube, and please click like and subscribe. And I look forward to sharing more of this with you again soon.